Finally, after a long time, after thinking for so much and having so many requests, finally decided to record this bootcamp. Welcome to DeiLux Nation, everybody. This is Bootcamp Day 1, the first bootcamp video, and it's designed for everyone, whether you are a beginner or advanced in Forex. This bootcamp is meant to take you from zero technical knowledge, giving you the basic understanding in the market and what approach to take. I will be focusing here on my self-developed strategy, DeiLux, and my self-developed approach into the market. And after this, you should be able to identify good trades in the market. I already have a few videos on YouTube, and this video is not a contradiction to the ones I already have. Rather, it's a simplification. It has simplified. Rather, I have simplified what we have been doing in my community over the past 4 or 5 years. Keep in mind, my goal in trading is to keep trading simple. If you haven't heard of Forex before, I advise you to watch my previous video called Intro to Forex, where I go through the basic terminologies and basic of Forex, such as buy limit, buy stop, take profit, stop loss, pips, and all these things. This video will not be going through all these basic things, but I will be going directly into technical analysis and not on how to open an account, open this, and open that. That being said, let's dive right into it. So we are currently on TradingView, and as you can see, this is my chart, right? And in this video, I'm going to be focusing on understanding the RSI, Relative Strength Index, what you see here. I'm going to be focusing on buying power, selling power, and I'm going to try to put it as simple as possible and relate it to the world, to the normal world that we know. So it all has to do with supply and demand, right? If you understand how supply and demand works and how it affects price of any asset, then you are good to go for this video. So let's dive right into it. So we have the RSI here, Relative Strength Index. So every time I say RSI, I'm talking about the Relative Strength Index. And over here, we have the value 80, right? Just going to put this here because I already prepared this chart. Over here, we have the value 80, and below we have the value 20. By default, you're going to get 70 and 30, but we usually modify it to 80 and 20. So when you put the RSI, it's going to appear like this. You're going to have two margins here. The margins are going to be by default 70 and 30. So you click on the settings. I'm going to show you how to do that later. And you modify your margins to 80 and 20. It's just going to expand everything a little bit. It's just going to take, this line would be here. This might be 70. This might be 30. And it's just going to expand it to 20. And it's going to expand this one to 80. And you're going to have some lines in between like this, something like this, right? That being said, let's get right into it and understand. So when the RSI hits the 80 level, we call this area over here overbought. When it hits this area here below, we call it oversold. I repeat, when it hits this area, when you see the RSI doing this and hits this area, the market is overbought. When it retraces or whatever, sometime in the future or in the past, it hits this line around the 20s, we say the market is oversold, right? What does it mean when the market is overbought? What does it mean when the market is oversold? This is what we are going to brush in this class. So let us take any asset of your kind, right? Let us assume you are a business person who sells a pair of shoes or jeans or t-shirt. If you're a business person and you have any good you sell, just take that. So let us do a simple example. Let us say you remove your good, you start your market, and let's call this t-shirt, right? You're selling sneakers. Let's put sneakers. And your sneakers is currently at $1, right? At $0 at this point. This point is $0. And you put your stickers up, you increase your price from $0 to $50. So right now, your sneakers is going to be $50. At the time of your production, the RSI does this, right? From 0 at the same time slot goes up by a certain amount of strength levels. So if this is 20, the middle here might be 50. Let's put the middle. This might be the middle. Let's assume this is the middle, and let's put this to be dotted. So we actually say it's the middle. So we say that this market started from the middle, for example. Where we start doesn't really matter. It went up by a few, like something like this, right? Let's take it from this dotted line to this dotted line. It went on by what? It went up by 1 pip, by 1 point, right? Not pip, not point, but just the value here. And you notice that during this period, there are 100 people who demand to buy your pair of sneakers, right? So at this point in time during the production, there are 100 people who are willing to purchase that sneakers at the cost of 50 here, at the cost of 50, which is here. And that will basically mean, let us make this make sense. Let us make this make sense. It means we start at 50. We start at 50. So what does the RSI do? It stays, right? Let's say it consolidates. You start your purchase price at 50, and after a period of time, it's still 50. So the same amount of people, right, that are available, or the buying strength for your sneakers price at $50 is around 50 people, around this strength level here, Let me just add one more thing to this chart, which is this, which shows, and one more here, selling strength is this one. So this is the buying strength here. So let's put this down here. And the buying strength from here, if the RSI hits this value down here, this is the buying strength. This whole area is the buying strength, right? So if this RSI right now, we are currently here. Let me just shift this 50 to this side. Let me put this here so it's good there as well. And I'm going to push this here and push this here. Now, after putting your price at $50, you notice that your buying capacity is the same. The 100 customers you have that bought this shoe for $50 are still willing to purchase that shoe for $50. Then you see the RSI consolidating. It does exactly what you do. Now, you notice that, okay, good. I have my customer base, 100 people, right? I'm going to increase my price from 50 to 100. What happens is that the RSI might go up. The RSI follows you. What does this mean? It means your buying strength that was here, right? Your buying strength that was here has reduced. Because if you see the volume of this rectangle and the volume compared as it was before, okay, this is the volume of the red candle before, and right now it has gone up to this level, right? So the volume here is way smaller than the volume here. So this is the buying strength. So the buying strength has reduced, has gone up. I repeat, if you're not getting, we started here during time of production, your sneakers, and You started at the price of $50 for a pair of sneakers. You had a purchasing power of 100 people. 100 people were willing to buy this shoe for $50. Over a period of time, let's say 1 month, you kept your price at $50. The same amount of people willing to purchase this shoe for $50 stayed the same, 100 people. Now, in the second month, you increase your price to $100 for the same pair of sneakers. What happened is that the strength index of this shoe at that price increased, right? Increased to this level. What does that mean? You see that your buying capacity is reducing. That is the volume here, the area of this rectangle. And let's just continue. What happens then is that this is what happens in the market. All of a sudden, when you notice that 100 people that were ready to purchase that shoe for $50, now it is 100. From those 100 pro, they have reduced, right? Because it's your buying strength, the capacity has reduced. It reduced to maybe 75 people. Right. Now, 75 people were buying, you check, okay, if 75 people buy the shoe for $100, it's still worth it. So what you do is, for example, you might bring the price down to $50 again, right? You bring the price back to $50. What happens is that the RSI might drop to this level, right? So what happens? At this time, you have this amount of buying strength. You have more buying strength than you had before here. At the same price level, at the same price you had like before, right? The same price you had like before. And let's do this game all over again. Now you increase your price again to 100 the next month, and the RSI goes back to that same level, maybe even just a little bit like this, right? And what happens with the buying strength? The buying strength reduces to this level, right? Now that this mechanism is understood, now that it is understood, let us look at some real scenarios in the market. Let us now try to create some real scenarios. So we go back here. Let's just delete all of this. Delete. Delete. Let's delete all of this and let's start back here. So now take for granted that we started, for example, here, just to have more space on the right side, right? Just to have more space. Everything is going to begin here. This is our buying capacity. Let's just put in more buying. Let's put the buying capacity at this time here. Let's push it up here. We don't even need this arrow because we are going to work with this rectangle. So this is the amount of buying capacity we have, right? So what happens if the market goes up? You increase your price, right? The same person, you increase your price this time around by $50. Your shoe is more expensive now. It is currently at 100. The RSI goes up. That means your buying power reduces to this level, right? Now, you reduce your price by half of what you increased it. Like you increased from $50 to $100, your buying strength reduced. Now you reduce your price not from 100 to 50, you reduce it to half, to 75, right? You reduce by $25. So right now you're selling the shoes for $75. What happens with the RSI? Let's say, for example, the RSI comes back to the same level as it was before. That means your buying strength increases back Same buying strength at this moment. So right now, what can you tell by looking at these 3 points in the market? Point A, this, point B, point C. You can see that even though from here, let me take a different color this time around, from here to here, green, even though this pair of shoe is more expensive, you still have the same buying capacity as it was before in month 1. Let me repeat that again. Even though your price at this point after 1 to 3 months is more expensive than your initial price few months ago at $50, you still have 100 people that are willing to buy that shoe. Let's continue. Market, you increase your price again to $125. This time you are increasing your price to more than 100, more than what you had before, right? Because you notice that right now you still have the same buying capacity as before. So you increase your value, the price of your sneakers to $125. What happens with the RSI? You see that the RSI reduces back to the same amount of people. Let's say from 100 people that could afford, that were willing to purchase the shoe, your customer base, it reduces again to 100 to 75 people, right? Because this would be half of it. This would be 50, right? I mean, if you check this as your base, like this is 0, this is 100, and this is the middle, right? This should be somewhere like 75, around 75. So you have now 75 people that are willing to buy the shoe at this price, right? 75 people that are willing to buy the shoe at this price, the same buying strength like you had when it was here. So you have the same buying strength like you had when the price was $100. When the price was $100 per sneakers, per pair of sneakers. What you do again, what market does is you now reduce your price to $100 here. You reduce by $25, right? You always reduce by $25 and you increase by 50. You reduce by 25, you increase by 50. So what happens is the RSI comes back and reduces to its initial price here. And what happens is we have the same buying capacity. So we see that if we connect these 2 points to this, that means, and connect this one on the RSI, sorry, the green one on the RSI to this, we see that we have the same buying strength like before, the beginning, when the shoe was just $50. We have the same 100 people that are willing to buy your product for currently is $125, right? No, currently it's $100, right? Now, you increase your price again by 25, by 50. So now, right now we are at, this is 100, this is 150. This is $150 per sneaker, right? This is here, sorry. This is here. And what happens? The RSI goes up to the same level, right? The same level. And the market comes down, you reduce by 25 at this previous high, because this is 25. What happens with the RSI? It comes down to the same level. You increase again. What happens? It goes up to the same level. And you reduce again to the previous high by 25. Then it comes back to the previous level. You increase again by 50. RSI goes up. You reduce again by $25. And it comes back to the initial price, right? So now let's expand this. Let us expand this and let us see, what do we have here? We see that we have the market. Yes, okay, we have the market having a steady buying strength. Let's just shift this. Let's make this like this so we can see better. Okay, good. We see that this market is actually buying. You see this? It's climbing. And what is happening with the RSI? The RSI, on the other hand, here is consolidating. The RSI is consolidating between this, in this range. Exactly. The RSI is consolidating in this range. That is the first law. This is the first scenario we call. That is one. Just give me a second. That is market buy plus RSI consolidating. It's equals to buy. So this is the first scenario. Market buying here, and the RSI is consolidating here, is equal to a buy. Does that make sense? Market buying, the RSI is consolidating, is equal to buy. For those who have been with us for a very long time and you already know the formula, this is the methodology behind. When you play with your supply and demand, when you increase your price, when price goes up, you see the RSI goes up. When price comes down, the RSI retraces, it gains strength. Like I always say, it gains strength. And based on that price action, up, down, we analyze it and we try to predict what is the next possible move. So whenever you see this structure in the market, that the market is buying, the RSI is consolidating, what we do is we anticipate a buy. So when do we buy is the next question. In this bootcamp, I'm just going to go, in this current day, in this video, I'm going to go through the scenarios. This is scenario one. Now, let's go through another scenario. Now, let's go to scenario two, right? Same story. You have your shoe, you increase the price by $100 from 50 to 100, you increase by 50, you're at 100. What does the RSI do? You have this purchasing power at this current time, right? This purchasing power at this current time. And the RSI goes up by such a value, right? Now, you reduce your price by the same amount, you reduce by half of what you increased, right? You increase by 50, you reduce by $25. You increase by 50, you reduce by $25. Now, the RSI went up by 1, and now that you reduce by 25, it goes down by 2 points. That means it is lower than where it was previously. What does that mean economically? What does that mean in our daily life? So, at this point in time, you still had it like you had 100 people who could afford, who were, your customer base was 100 people, right? You increase your price by $50 to 100, your customer base reduced from here to here by, let's say, 25 people, right? And currently you have just 75 people from your 100 people customer base. Right now, you've reduced your price by $25, and what happens to your customer base? Your customer base increases. You see how this area increases to this level, right? Your customer base is bigger than what you had before. Take note, what would you do if you increase your price of whatever you're selling, your customer base reduces from a certain amount to a certain amount, then you reduce your price and your customer base increases to more than what you had earlier on, what you initially had. That is great, right? Because you currently have more customers than before. Now, This is what happens also in the market. Now you increase your price again by $50 here. Your customer base reduces by this amount, by half of what it dropped, and you reduce your price by half, and your customer base dropped by double. You increase your price again by 50, your customer base goes up by one step. You reduce your price by half, your customer base drops by 2 steps. So let us interpret this. At this point, we've noticed that our customer base, our demand is more than here. Our supply is even more expensive. You increase now your price, and what happened is that, let's take from here, the demand reduces. The demand reduces. It's too expensive for people, right? At this point, it's so expensive for people. So you reduce your price again, and your customer base increases. That means your buying strength increases to more than what you had even before, and way more than what you had initially. That means that if you see this structure, there is a tendency for you to keep increasing your price or doing the same thing, isn't it? So we do it again. We do it again. We increased the price again to this level, right? Let me just have one in a different color where I would show my current line. Let's take it. Let's put it thicker. Let's put it in deep. No, this is not visible. Let's put it in this. Let's put it a bit thicker, maybe a little bit more thicker. We are currently, okay, no, that is fine. We are currently here, right here. Now we increase the price again. So this was 50, this is 100, this is 200. Oh, this is 150, this is currently 200, whatever price it is, that really doesn't matter. The point is that we are increasing our price by a certain amount, and we are reducing it by half of it, or whatever part of it. But we are reducing it way less, higher than the previous high, right? What we are looking for is this market structure, that we have higher highs and higher lows. This makes the market to have a bullish trend, right? A buying trend, or a buying structure. And market went up here to this point. Our buying strength reduces again. The volume here reduces. We reduce the price. Market came down, and our buying strength increases, right? Buying strength increases. That means this is the buying strength. It increases, right? We do that one more time or two more times, please. We increase again, higher highs. I will reduce again by something higher than this. So we have this, and now we have this, right? Let me do this. Actually, this has to come down. That being said, when you look at this market, when you look at this, what do you see? You see that this market is oversold, right? Here, oversold. But that means we even have more buying capacity right now. So you see that when we have this market structure of market going up, the RSI is going down, there is somehow a tendency for this market to keep buying. Because if this happens, this will happen like many times, right? You see market having the structure, the RSI is dropping, there is a tendency for something, either buy or sell, or maybe even consolidate. But ladies, if you can identify any of these lows here, these higher lows, would be a good time to buy. So in this case, what do you think? What do you think is the formula here? Market is buying and the RSI is dropping. Is this a tendency for buy or sell? What do you think this market is going to do? What do you think is a higher probability? If you have understood its logic, some little math inside, so just tell me while I'm typing. Buy or sell? Strong buy or strong sell? I say that was good. Strong buy, not a strong sell. Why? Because we've seen that our price is even more expensive, but our customer base has even increased even more. It's not just a normal buy like we had before. It's a strong buy. We are going to show you some examples in the market, these scenarios, right? So we've done the market is buying, the RSI is dropping. The market is buying, the RSI is consolidating. Both are buys. Sorry, this is a buy. Buy, strong buy. So now, for the sell example, it's the same thing when you look at it from the other way. Like when you turn this upside down, that means I'm going to use red this time around. This, I'm going to use red. And this, so we have this. Let me start here because we need the space above. Market goes down. RSI goes down. Market goes up. RSI goes up by 2. Market goes down. RSI goes down. Market goes up. RSI goes up by 2. Market goes down. RSI goes down. Market goes up. RSI goes up. Market goes down. RSI goes down. Market goes up. RSI goes up. Market goes down. RSI goes down. So if you look at this, now don't fall for this trick. We are talking here of a sell scenario, right? You can see that this market is actually selling. Let us fix this a little. Yeah, like this. And you see the RSI is rising. So it is actually the inverse of this. Market buying, RSI dropping, right? So market selling, RSI rising. It's the opposite of this. So what do you think is going to be? If we are looking at the selling strength, now we start from here. Selling strength, you need to look at it going down. This is the maximum selling strength, right? This is the goal is down here. Selling strength starts from up. You see the arrow coming down. You remember the buying strength, the arrow was down, facing up, right? Facing up. Let's put that in green. That was the buying strength. Meanwhile, the selling strength is from up facing down. That means at this point, the selling strength was here. How many people are there to sell this market, this amount? Then the market reduces its price. The market reduces price. Now just think, what if price reduces and the selling strength increases? Do you have a tendency to sell or a tendency to buy? As logic as it is, the tendency is there to sell, right? Market reduces its price again by 1, 2, come to this level, and the selling strength increases again. This is the maximum selling strength up here, and this is the lowest selling strength down here. This is the maximum buying strength down here, and this is the minimum buying strength up here. So you see that as this market is dropping up, down, at this point here, let's shift this green here. You see that at this point, the market is cheaper than here. It's cheaper. But here and here, where are we? Here. We have more people willing to sell this market. The selling strength has increased from here, has increased from here to here. You see the area from here, this rectangle has increased its volume to here. So when the market is going down, the RSI is rising, we have a strong sell because it just makes sense. It just makes sense that when something is cheaper, when something is reducing in value, we have more people are going to buy, more people that are willing, affording, that can afford to sell this market, they will sell it, right? It just makes sense. It's the opposite of the buying scenario. So I'm going to give you an assignment while I type this. Think about when the market is selling and the RSI is consolidating, the opposite of this, the opposite of the first one. So I'm going to type this one here, market selling plus RSI rising from sell. Market selling plus RSI consolidating. What does this equal to? If the market is selling, according to you, according to this principle, if the market is selling, the RSI is consolidating. What does that mean for you? Buy, sell, strong buy, strong sell. Correct? It's a sell. Very logic. Makes sense. It's a sell. And this is it. These are the main scenarios we look for in the market. There are many scenarios in the market. You would also see the market behaving very normal. What do I mean by normal? You see the market going up, the market going down, the RSI is going down, the market is going up, the RSI goes back to the same level like it was before, market drops back to this previous low, RSI drops back to this same previous low, market goes up to this previous high, RSI goes up to this previous high, market comes down here, the RSI breaks also this level, market comes back to this previous low, the RSI comes back to this previous low. That is, the market is doing the same, the RSI is just copying. The same thing. There, we do not trade. There, we see the market is normal. What we are looking for in DeiLux is abnormalities in the market. Abnormalities in the market, because when the market is abnormal, we can predict, we can analyze, we can get more data from that to predict what might possibly happen. That being said, this is what you should know about RSI and the market. This is the basic concept. Once you've understood this concept, you can go along and try many things. Now I'm going to ask you some few questions because there is a lot that we could still do, a lot of scenarios that we could still find. So get ready. Let me clear this chat a little. Let me clear this chat. No. What happens if the market, in this case, the market has a direction? What happens if the market is consolidating, and the RSI is dropping? RSI dropping. Think about it. The market is consolidating. and the RSI is dropping. Let's clear this. Some of you might want me to clear this so you can actually. Yes, I'm going to leave these ones. I'm going to leave the white one because it actually indicates the RSI dropping. And let me remove these ones here as well. Just think about it. Give yourself a minute. What happens when the market is consolidating and the RSI is dropping? Let me put the scenario here. Here, here. We get back to the same price, same high, sorry, same low, same high, same low. Yep. What happens when this market is consolidating like this and the market is dropping? Would you say it's a buy or it's a sell? That means the same price you had when you opened your business. What if you look at it from a buy perspective? What does that mean? What if you look at it from a sell perspective? What does that mean? Right. Let's look at it from a buy perspective, or from a sell. Which you want? Okay, somebody say sell. From a sell perspective, this is the maximum sell, right? Selling strength max is here. It's actually selling strength maximum is here, and buying strength maximum is below here, right? So we have one here, we have minimum also, min. Buying strength minimum is up here, selling strength minimum is down there. So if we are looking at the sell, this is the maximum up here, this is the min. So we are looking at it like this. We are leaving maximum to min. So here, this is the selling strength. The market is consolidating. The market is consolidating, and this is the amount of people that were, let's adjust this to here. This is the amount of people, market consolidating, RSI dropping, yes. This is the amount of people that could sell, this amount of people. So selling strength, should we sell? And the market is consolidating and our selling strength is reducing. Would you sell? If the market is consolidating and your selling strength is reducing almost to zero, would you sell? No, you would not sell, because you would be the only one in a short position. You would be the only one in a sell position. That doesn't make sense. That is not smart. Let's look at it then from a buying point of view. Maximum buy is down here. Minimum buy is up here. So we start from max and we go like this. If we are buying and we are losing the strength here, right? So at this point in time, we have this amount of people willing to buy, right? Because this is how we need to start, because if we buy and the buying trend reduces, we go to zero, right? We close it from the max to the min, right? Same thing like we did when we're selling, we took from max to min, right? Now that we are looking at the buy, we take from down to up, from here, and we go up. So we start here. Market is consolidating, the RSI drops. So this level here, it goes up here, drops here. Oh, it's increasing. The buying strength is increasing. It goes up here, it decreases here. It's increasing even more, right? So when the RSI is consolidating and the market, so when the market is consolidating and the RSI is dropping, there is some more probability to buy. We are looking for buying positions. I would be looking for buy positions, right? Because if that keeps happening, sometimes this RSI might drop to the market being oversold. Right here, oversold. Buying strength is at its maximum capacity. And if the buying strength is at its maximum capacity, what does that tell me? I should look for buy positions. I should even go for a buy. Look for my next position, my next possible move to buy. So if the market is consolidating and the RSI is dropping, this is a buy. Very good for those who had it right. And now, same thing. Market is consolidating and the RSI is rising. What does that mean? Some will say, obviously, if the previous one is a buy, this one is going to be a sell. Okay, that is logic. But do you understand? Have you understood the concept behind it? Have you understood the concept behind it? Let's just look at it. Market is consolidating and the RSI is rising. Okay, that means I will need to place the arrows. Pam pam, pam pam, pam pam, pam pam, pam pam, pam pam, pam. There we go. So let's look at it for who says everybody's saying this is sell. So let's look at it from the sell point of view. So selling strength max is here going to mean, so we need to take from here, right? We need to take from up here like this. So this is the selling strength we have at the beginning. And we notice that over time, if we take this time space, over time, we have more selling capacity at this time. If we go one more to the right, we have even more selling capacity. Therefore, we have more selling capacity here than here at the beginning. Therefore, this indicates us that we are looking forward to sell. You guys had it right. As simple as that. You guys had it right. So that being said, let us just go into the market, right? And check for some few scenarios if we can see them. Let's just go to 15 minutes time frame on US 30. Okay, good. Let me remove all my indicators right here. And let us add the RSI into our chart, right? Indicators and strategies, relative strength index, or you search for RSI, it should come. It's actually the one you see, relative strength index, not anything else, not this, not something else. Relative strength index on the technicals. You add that to your chart and you'll get this. When you get this, this is the standard. Make sure you're on 14 close, right? You go to settings. You want to remove the RSI base MA. We don't need that as far as we trade in my strategy. We put the RSI upper band, this dotted line you see here, to 80, and we put this one to 20. See what happens. Like I said before, it expands, right? This is 80, this is 20. It expands. Now let us look for some scenarios in the market. You see here, for example, let's look for market buying. Let's go on the 1 time frame. Okay, this is a good one. This is a good one. Let's say here the RSI is somehow consolidating here, right? What is happening with the RSI here? It's rising, right? It's rising. Another one. What does that mean? Short sell. The sell. Very good. Let's look again. You guys remember that we did something like this. We tried identifying these key points in the market like this, like that, right? So to simplify everything, as I said, I want to keep it simple. What we do is we look for 2 previous lows, right? We look for these lows because you remember we had something like this, right? And we were always looking at the lows, right? We're not looking at all what is happening here and here. We just look at the bounce back. So this is the same thing we are looking for in this market. We notice here, the market left here, went up, came and bounced here, for example, right? This point in the RSI is this one, and this point in the RSI is this one, right? So we see that this market is going up like this. So what happened when the market is going up? The RSI is dropping. We said strong buy. Sorry, there we go, right? Simple, simple, simple. Let's look for more. Let's look for more. Let's look for more. Let's look for more. Okay, this is a sell. Now we see. You see this selling strength here? Here, the market started here and sold and sold and sold and sold. Let's sit till here. You see the selling strength here was at what level? At this level here. And at this point, the selling strength is the same as it was here, right? So the selling strength is the same as it was here. Remember, for sell, we had this structure. We had this structure. We had this structure. And the RSI was doing this. So we said the price is cheaper, but we have the same selling capacity, right? High to high, high to high. We have the same selling capacity. If we're checking from, sorry, this high goes, sorry, this is so wrong. Instead, like this, like this, like this, like this, like this, like this, like this. So we're taking from this high to this high, taking from this high to this high. If we take from this high to this high, take from this high to this high. So same thing here in this market. We take from this high to this high, we take from its corresponding RSI strength level to this corresponding strength level. That means the same selling strength that was here at this time, sorry, same selling strength that was here at this time is the same selling strength that we have at this time, right? If you want me to draw the rectangle, the selling strength, this is it here, right? You remember selling strength starts from, sorry, let me delete this one. It starts from the maximum is up and it goes down to minimum. So we start from here and we are going down, right? So the selling strength went down here like this, came up, did this. You see how it played around? Here, the selling strength was minimum. Then it had to go up a little, gain some strength, and it came back here. The same selling strength here. Market is instead cheaper. What does that mean? Tendency to sell. Very good. Great job. Let's make the same thing. So we have, this is even a very good one, right? So let's look at this. It's a good example. Sold from here. Let's say bounce here and came here, right? Now it did this again, bounce here and came here, right? And then RSI did the same thing, right? Here, let's say bounce here and came here. Bounce here and came here. Let me call it there. This is the corresponding here. So what do we have here? We have from this high to this high. So from this selling strength here, same selling strength here, we can literally just push. Oh, or can I push this? We can literally just do this, right? It has even increased, right? It has even increased. So the market has fell, price dropped, but the selling strength is the same as it was here. What does that mean? Sell. And in this case, it has even increased because it was here previously, and right now it's here. What does that mean? It says strong sell. There you go. And for sell scenarios, so you know, for sell scenarios, we take from the higher highs. You guys see I take just from the highs. I don't take from the lows because from this high is when we sell, right? For buy scenarios, I take from the lows because we buy when the price is low. Okay? Let's go to again and see any massive buy and see if we can we have any example to do there? Okay, let's look at this one. Market left this low to this high and came here, right? Corresponding on the RSI here and here, right? Down here. Oh, come on. Let's do this here, right? And it does the same thing again here and here to this point. So if we look from this low to this low and from this to this, what does that mean? The same buying strength here going up. Guys, remember the buying strength was looking up. The same buying strength here is the same buying strength here, maybe even more. But the market, you have increased your price, right? You increase your price by this, you reduced it by this, and you have the same buying capacity equal to buy. There you have your buy, right? Even if you want to look at it from here to here, right? Then you take your RSI, from here to here. Where is this? This is the here. It still indicates a buy. And there is your buy, right? Same thing. You can still take it from here, it goes up. I don't know if it goes up here, comes down here. Here goes up, comes down. You increase your price, you reduce it by something a little bit less than what you increased it by. You have the same buying capacity. You've almost regained all your buying strength. What does that mean? Buy. There you go. This is the mechanism, the concept, the technicalities of DeiLux. That being said, Bootcamp Day 1, Bootcamp Video 1 is finished. I don't want to give you too much, but this is the basic concept. We can go deeper into this, and deeper into this. That being said, it's your guy, Professor. I'm happy you're here, and God willing, we'll see ourselves on the next video.